China has recorded an unusual monthly trade deficit amid warnings of a weakening outlook for the world's second largest economy. According to new figures released by the General Administration of Customs, imports rose faster in March than exports, standing at $183 billion. Trade payment outflows for the month therefore exceeded inflows by $880 million. Analysts blame the shortfall on continuing fragility in China's two biggest foreign markets.
Europe continues to struggle with its debt crisis, and the recovery in America is weak. With no immediate prospect of improvement in these two economies, we shouldn't plan on demand for Chinese exports picking up anytime soon.
With exports floundering and domestic consumer demand still undeveloped, China has been relying on government-led spending on property and infrastructure projects to keep its economy growing amid the global financial crisis. On Tuesday, the release of lower-than-expected inflation figures for March might have been seen as showing plenty of room for such policies to continue. Instead, however, more and more economists are saying the government's investment spending should be scaled back. There was much talk of a looming shadow banking crisis at a recent international conference in Hainan. Analysts say that China's banks have been removing non-performing loans made to local governments from their books by selling them to trust companies, which in turn repackage them and sell them on as investment products. If local governments keep borrowing for projects that don't make a return, and if the shadow banking sector continues to repackage non-performing loans, a mountain of hidden debt could pull down the economy in the same way that subprime loans sunk America.
And so a lot of very poor investments that otherwise would be defaulting are actually being rolled over into investment vehicles that promise higher and higher returns. It's a great way to kind of roll over bad debt and make it look like the banking system is doing just fine. But if people either lose confidence in that or they actually need the cash, then that can unravel very quickly, and it can unravel very dangerously.
Citing concerns over an estimated $3.7 trillion in Chinese shadow banking credit, the global ratings agency Fitch downgraded China's credit rating by one level to A+. Stephen Rebay, Press TV, Beijing.